Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time. May the 19th already. I can't believe this. So the lockdown continues, but it's getting a little bit better, right? More cars on the road. All right, so what I want to talk about today are what I perceive to be the next threat to this market and an indication that I believe that companies are beginning to see signs of a top and a good time to issue new shares. Now, let's keep in mind something, that during the big bull run from post-financial crisis, one of the primary drivers of the stock market rally was companies' share buyback, meaning companies are going into the open market and buying back their own shares. Now, what we're seeing is a potential threat to these companies. I shouldn't say to the companies, to the investors in these companies, current investors, is the fact that these companies will soon be going to market and issuing new shares. And I've been talking about the banks in particular over the past several weeks, and this article goes back to April the 16th. And when I read it, this is off of Zero Hedge. When I read it, I said, wow, this is going to be a problem longer term. Headline, Kashkari. That's Neil Kashkari, Minnesota Federal Reserve Chairman, Governor, President. Kashkari urges banks to sell $200 billion in stock now to survive the coming crash and avoid another bailout. And I expected a rally in the banks, which really never came. I expected the Federal Reserve to help pump them up so they could issue shares at a higher price. You saw the banks move up higher yesterday. Perhaps it's the Federal Reserve in there setting the environment for them to do so. The article continues. Yesterday, when looking at the latest credit loss reserve numbers from America's top banks, which amounted to $27 billion among the big seven banks, a number which was understandably 4 times greater than the total provisions set aside a year ago. Understandable. No great shock. Moving on. We said that despite the significant increase, mostly JP Morgan, blah, 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 the number won't be nearly sufficient by the time the corona session is over. Why? Because we also showed the last time the U.S. economy suffered a horrific recession similar to the one right now, the total loss reserve ratio soared between 4 and 6%. It is now only 1.5% to 2.5%. These banks do not have sufficient loan loss reserves. I'll finish this off. Well, it won't. If we won't add them now, he will add them in Q2 when loan loss provisions will explode, and expect bank loss expectations will soar by double digits across most banks. As the ghost of 2009 loan losses fully materialize. So we've talked about this, that Q1 was just the tip of the iceberg of bad earnings data. Q2 is going to be the pimp Mac Daddy. Leaving off here. So to put it all into context, so far the big 4 banks have reserved an additional $24 billion in Q1 for future losses. But if the GFC, it's the Great Financial Crisis, is any indication of defaults that are about to be unleashed, the real amount of losses, discharges, and delinquencies will increase by 3 to 4 times compared to the current baseline. Meaning, over the next several quarters, banks will have to take another 75 to 100 billion in reserves on loans that go bad, wiping out years of profits, which were not used for a rainy day to fund, but to pay for, drum roll please, buybacks. They're going to need to issue new shares. Now, why am I bringing this up now? Article released yesterday, 5/18. Fearing an imminent top, companies flood the market with stock for sale after the close. Now, I'm not going to read all this because I don't like to read all that much because people get bored. Unless you like it, and I'll do it. But I'm making the assumption. In short, weekly equity offerings are surging. Companies like Zillow, Equinox, and these aren't large company Equinoxes. These aren't large companies, mostly lower to mid-sized companies. Who's the buyer? This is from Robinhood. These small individual traders, young, using the Robinhood app, they are trading their heads off as they are locked down. And this is an example of what really concerns me. Moderna, for example, and this may sound familiar. Moderna was just announced yesterday that they announced positive results on a trial of one of their drugs, and it's one of the reasons, quote unquote, why the market rallied. I never bought into that. Moderna, for example, launched the largest of 3 stock offerings since going public in 2018. After Monday's 20% rally capped off a more than 300% gain. So smart move on their part. And here are a number of other companies. Clovis is a company that's a household name, but the other ones are fairly small companies. But you can expect this to continue, and it'll become more and more household names, in particular, the banks. Did Moderna just pull off a giant bait and switch? Company sells stock after the market moving rally. Can't blame them, assuming that it's legal. So here, just to validate, here's off of their own website. May 18th. This is pre-market, 7:30 a.m. on the 18th. Moderna announces positive interim phase 1 data. And then after the markets open, the shares spike. What do? They announce another offering at 10:30 a.m. Pacific time. So Moderna, it closed off the highs of the day yesterday. A little bit overbought, but net it absorbed the news well. That I must say. Good morning, Oliver. So do we believe that companies are taking advantage of a perceived top here? In all probability, yes. And the larger companies, specifically the banks, I'm sure at some point in time are going to be strongly encouraged to take advantage of whatever rally they get off of yields rising right now to issue new shares. You could see yesterday the XLF, which is the bank ETF, rallied over 5%. So more to come here. We'll keep an eye on it. But this, I predict, is going to be the next bit of pressure on the markets. And you may say, Bob, it's a good thing they're raising capital. They're going to be able to pay down debt. That assumes that they're going to pay down debt. That assumes they're going to do the right thing with it. Companies can issue shares either to do the right thing with it, and even when they do, even when they say what they're going to do the right thing with, many times the shares still sell off because it's perceived as being dilutive. Now, you also have companies out there that raise that capital to do what? To pay out bonuses. And if they do that, or if they don't use that money efficiently and they waste it, well, then they just destroyed shareholder value. So net, from what I've seen historically, when you get announcements of dilution of share price, the shares do not behave favorably in the short to medium term. Let's go to the pre-market activity. This is gold. We'll come back to it. Let's go to the Heck, I have the S&P futures up here. Not the S&P, these small caps. All right. So overnight, what we saw was a major surge to new weekly highs on not just the Russell 2000, but on the small caps as well. You could see this big reversal bar overnight, and now we are pulling back. And while we were up earlier, we are now down spot 86% on the Russell 2000, on the NASDAQ 100. Very similar price action. However, we were down lower earlier. We have now rebounded somewhat, but we remain down. Yeah, when I woke up, we were down here. We bounced. Now we're moving down lower on this 5-minute chart. Back to the 4-hour chart. Let's take a look at the large caps on the S&P 500. Why that's not up, I have no idea. All right. Again, very similar price action. Reversal bar, we're down about a 0.25 percentage point on the session. So the price action here is not favorable to longs. Moving on to, let's check out the US dollar. The dollar continues to be very weak here. Jay Powell's 60-minute interview did not bode well for the US dollar. Good morning, NY Jets. Roy, good morning. Let's check out gold and how it's behaving. Yesterday, gold had a very bearish day. Now, we're bouncing this morning. We were lower when I first woke up. We're bouncing here, but I would be careful. I mean, yesterday's bearish daily price action, let's bring it up really quick to illustrate, was concerning, to say the least. And what I read into it was that here we rallied, tapped that third standard deviation Bollinger Band in red, reversed to close just off the lows of the session. What I read into it was that while you saw money rotating into stocks, really for no reason, and I'm talking about a huge move here. You had old industrial names, transports moving up higher. I think that what you saw was fear leave the market as represented by the VIX, which came off yesterday. And it was reflected, the lack of fear, in bonds selling off, yields moving up higher, gold, the bid coming out of it, sellers moving in, and the dollar weakening up as well. Because the dollar and gold, I went over this with numbers last night on Market Wrap, it showed the correlation of late versus historical. The correlation is very tight of late, trading in tandem, but that is not the historical norm. The only reason why it's happening right now is because of fear in the marketplace, and that fear is coming off. So gold, I'm a little bit cautious on. Longer term, very bullish on, don't get me wrong. But in the short term, given that daily price action, I need to be a little bit cautious here. I want to buy the miners. I want to buy silver. But silver became overbought yesterday yet again. Speaking of silver, let's see how that's behaving this morning. Silver down a bit, but holding a bid. You can see they tried to rally it, but it was rejected. This is a 4-hour bar, which only opened up a few minutes ago right here. So we can launch here. So the jury's out as to whether or not we're going to weaken up further immediately. But I do believe that silver is going to come in here a little bit. So while I'm bullish longer term, I wouldn't be a buyer at current. I'd let the technicals come in a little bit. Because much as what we saw with gold yesterday, tapping the third standard deviation Bollinger Band, we saw the same on silver for the second day in a row. So just be careful. Nat gas, huge day yesterday. Absorbing gains today, down a little bit. Is this a new rally or is it a new short squeeze? The market will tell us. Do we break out above this resistance level here at around 1.80? Or do we fade yet again? That's the question. So would I be a buyer here? No, we're at resistance. Allow it to break out. If it breaks out, then it's worthy of our investment dollar. If it fails, then we'll let other people step in there and try to guess a bottom. But we want to trade on the fact. And the fact that we're looking for is a continuation breakout. So a very nice move. Let's go to oil, light sweet crude. Huge day yesterday, up slightly this morning. We opened up a trade yesterday, which gave us exposure both to emerging markets and to oil at the same time. Let's go to bonds. I want to see what we're doing. Yesterday was a big day for bonds. In fact, I want to go to let's go to the daily chart because the 10-year yield hadn't updated. I want to warn folks about something as well this morning before I go to the 10-year yield and how we closed out or how we opened up the week this week in a moment. But first I want to go to the yield curve. And I warn about this constantly. And this chart here is 2s versus 10s. Overlaid here in blue is the S&P 500. In gold is gold. Candlestick is the yield curve. When the yield curve steepens, meaning these candlesticks rise to keep it simple, the stock market traditionally trades inversely. Perhaps not immediately, but ultimately inversely. Just like you saw back here in 2000 into 2001, back here from 2007 into 2008, we may be setting up the same at current. We are very close to the highs of the month, just off of them. Watch for a continuation move here. Now, going to the 10-year yield and how we closed out or opened up the week this week, I want to use a weekly chart to illustrate. Look at this move on the 10-year yield. This is huge. Now, to keep things in context, last week, this is a weekly chart, remember. Last week, we spiked up to open up exactly where we closed yesterday. What did the Federal Reserve do? They hammered the yield down, closing back down below the lower band of support. There's a war going on here between the market and the Federal Reserve. The markets are trying to find fair value. The Federal Reserve refuses that fair value discovery to be had. And the market struck back again yesterday, despite Jay Powell's extremely uber dovish 60-minute interview. Yields popped up higher to the highs of last week, which was out. Let me validate that, make sure I'm not speaking incorrectly here. The high of last week was at spot 7.3. Where did we close? yesterday. Just shy, to be accurate here. Just shy. Oh no, it's the same price. Let me get rid of this. Upper. All right. There we go. That's better. Yep. Right at the top. This is a huge gap up. I mean, major, major move. And take a look at your Stokes. They're hooking up with a higher low. Ultimate oscillator, higher lows. Yields are pressing up higher. There's a war going on in the bond market. And all you need to do is take a look at the TLT, which is the 20-year bond price. No new weekly low yet, but when you take a look at a daily chart, we gapped down yesterday. So there's a big tug of war. I want to check out volume. Volume rose, but still below average. A big tug of war going on in the bond market between the Federal Reserve and the market's trying to find fair value. And both entities, both parties are extremely powerful. So let's take some chart requests. I have a couple from Franklin. I meant to go over his on Sunday night, but I neglected to do so. Let's bring up our friends over at TrendSpider. Folks, if you like TrendSpider, there's a link below in the description area, 25% off. I think it's TC25Z, the discount code. Oh, and this is for, I believe Trish asked me about McCormick. Beware of McCormick's. I was bullish on this on Sunday evening. This is a daily chart. We had broken out on Friday, but on Monday, we flashed a breakout point failure. We broke back down below support. So be careful here with McCormick. The price action yesterday was very, very bearish. Let's see whether or not we get a continuation move lower. Let's go to Vietnam, VNM, Franken. He's been watching. We've been watching Vietnam. I've been talking about it for quite a while now. We're looking for beneficiaries of companies leaving China, and they are leaving China. And my favorite name is Vietnam. Let's go to a monthly chart. The monthly chart is looking very good. We're just off the highs of the month. And we have broken out of a downtrend. Weekly chart. We have no new weekly high yet. Now note how this 20-period moving average on a weekly basis is acting as a declining ceiling. So I wouldn't be the least bit surprised to get a quick pullback here on VNM. Maybe not this week, maybe next week. And then another run as the 20-period moving average flattens out. And then we should break out and above it. Now, on a daily basis, nice move higher up yesterday. Take note of your Stokes. This is always a comfort when I see this. Higher lows. RSI, higher lows. This is what you want to see. This is great price action. And to me, this is not a very volatile play. To me, VNM is a longer term investment. You want to buy now or at these price levels, if you get a pullback here at lower lows, but they should be a beneficiary of what must be a movement of companies, a diversification of companies out of China. My favorite plays are Vietnam, India, Malaysia, perhaps the Philippines, but the Philippines of recent years have tightened their relationship with the Chinese versus the United States. So they are a distant favorite versus Vietnam, India, and Malaysia. So VNM looking very, very good. AUY, Yamana. Okay, so we took it on the chin yesterday, but no great shock. Yesterday was like a return to a risk-on day that we used to see prior to the pandemic, meaning that when the stock market rallied, you would normally see money move out of gold stocks, out of gold, because we didn't get it, us gold bulls, we didn't get it. You need to be long stocks, yada, yada, yada. And what happens is that the gold stocks take it on the chin along with gold. And what does that provide us? It provides us opportunity to buy more. So Yamana came into the week rallying up and into resistance level. Actually, this is a monthly chart. Came into the month rallying up and into resistance levels. So no great shock that we were stopped here at 4.98. What was the high of the month? 5.39. So this is a pretty significant pullback here. So we have resistance immediately above. So I wouldn't say buy Yamana here, even on this pullback. Now, what I worry about on a weekly basis is the close on the week, meaning we had broken out on a weekly basis above this resistance highlighted in purple. That's a former alert, which has since expired. I got to delete that. But what we've done at current is we have broken back down. We've fully engulfed last week's price action, broken down below key support, and we are flirting with a breakdown below secondary support. Now, the week's not over. All right, we have 4 trading days left to go. A lot can happen. Maybe we'll go off to new all-time highs for all I know. What do I know? But all I'm cautioning is that at current, this snapshot in time warrants a very, very disciplined approach to Yamana. I would not be a bottom fisher here. I would wait for an indication of strength. I want to reset my alerts here. Let's do this. AUY. Okay. So until such time as either A, we recapture support, or B, we reverse on a daily basis and recapture the support level here at 4.99. Let's call it $5 a share. The shares are untouchable. Daily chart. You can see that we're hanging on by a very, very thin thread. Big outside reversal day yesterday. Again, closing down below support levels. Let the markets send you a signal as to whether or not there's enough buyers out there, whether or not there are enough buyers out there to bid these shares back up. Don't hope when you should fear. At current, you should be fearing that we break to new lower lows. Maybe we gap up today, and that'll be a great thing. Fine. But let's see what happens. No reason to go hoping when we should fear. Roy, great insight. Looking into Vietnam. Thank you, Roy. AUMN, NY Jets. And folks, if I could ask you to smash that like button, I'd really appreciate it. It helps me out with YouTube and their algorithm. Here we go. Okay. Monthly chart, looking good so far. RSI, and this is what I mentioned earlier about, I think it was VNM, where you have RSI and Stokes hooking up higher. RSI is breaking out. So you have an indicator on a monthly basis leading price performance. We don't have a breakout on price, but we have a breakout on RSI, and Stokes are beginning to break out as well, at least the fast line. So it's pretty optimistic stuff. Weekly chart. You have resistance immediately above, and we did see some selling yesterday into strength, so it's a cause of concern. So while we're up on the week, you're seeing some selling pressure at historical resistance, which is declining. So just be careful here. Daily chart. Yeah, you got to avoid. Please avoid. Because we gapped up and through the third standard deviation Bollinger Band yesterday, and we saw sellers move in. Yeah, so I want to validate it on two separate charts, and that's certainly what happened here. I would expect to see some selling pressure here on AUMN. I would not initiate a new trade here. Longer term, ultimately we're probably going to break out further. I mean, this is a pretty chart, right? But it's a monthly chart. We have a few trading days left to go. If we get a pullback, we may form a wick on top of this candlestick. So the monthly chart is not in the books yet. At current, we're just off the highs of the month. So just be careful. I would not initiate a new trade at current. Hey, Pat, good morning. Just got up. What's going on? We're seeing a little bit of a pullback. Let's circle back to the futures. Oil's coming off a little bit here. S&Ps are now down by a third. Pat, what we saw overnight was a big reversal bar across the board on equities. You're welcome, NY. And I'm watching now to see whether or not we break to a new low. Now, we added to shorts yesterday. Now, hopefully that was the right decision, but we're going to use a tight stop just above, because if we break out above my current resistance level, we're going to need to stop out. Okay. We're good to go. Roy, on a technical basis, Roy just made a comment. Very healthy, low volatility. Smart money should be looking to accumulate AUM. Well, from a technical perspective, and really, fundamentally, I defer to, I outsource my fundamental analysis. I keep it very, very simple. I outsource it to IBD, Investors Business Daily. I focus purely on the technicals, and in the very short term, AUM is just a little bit concerning, the price action. Longer term, you could be 1,000% right. Let's check out, let's go to the NASDAQ 100. Again, I want to set up an alert here. And this way you don't have to keep staring at your computer screen. You let the computer do the work for you and send you a text. What else do we have? I want to take a look at gold. I'm hoping for a further pullback on gold and the miners. And you can see we are coming off the highs of the session here a bit. We do have stiff support below. So this coming week, I would imagine that we will be looking to add to our gold mining trade. Let's take a look at... Hey, Sam, where you been? I haven't seen you in a while. How's things over in Italy? Hope everything is well there. Silver. Still flirting with a breakout. Gold. Not gold. Excuse me. I'm losing it. Oil. Oil coming off the highs. Now negative. Was positive, now negative. All right. I'm going to do 2 more requests. And I'm going to leave off and get the day started here. Let's go to BA. That's an interesting one. Oliver, we'll leave off with yours. NY Jets. Bob, what is your ratio in the market of positive news versus fundamentals, if that makes sense? I don't know of much positive news. I really don't. And I think that the fundamentals are unknown. You have companies out there that 25% of companies weren't able to provide or unwilling to provide guidance. So we know the market's expensive. There's no doubt about it, whether or not you use the Shiller PE ratio or you use current PE ratios. The market is extremely expensive. And I wouldn't imagine what it's going to look like after we get Q2 earnings out. So there's no measure of good news that we could see at current that could justify forward-looking multiples as they stand right now. So I think that as Greenspan said many years ago, I think there's a lot of irrational exuberance out there. And what's providing that exuberance is twofold. One, these hyped up reports of vaccines which may appear at some point in time in the future. Now, just to put things into perspective, in the last pandemic was back during the end of World War I, 1918. That flu did not see a vaccine until 1945 during the end of World War II. So, granted, science is leaped multifold. So, let's just say that it's going to take 2 years versus, 20 years the last time around. That's a long time when you're trading these markets, especially when you have this kind of a multiple. The other thing that's underpinning the market is, of course, the Federal Reserve and their implied support for it. And the fact that they're in there buying corporate debt leaves a lot of people to believe that what's going to prevent them from buying stocks at some point in time in the future. So that's what's underpinning the market. It's certainly not the fundamentals. I mean, the fundamentals are just absolute trash. All right, so the request was for BA. I think BA, listen, the question for BA is whether or not we have an all-out trade war with China. And I warned about this last week We were short of China. We actually got stopped out of that trade yesterday. And thank goodness that we did, because the shares of Yang kept falling. And I predicted over the weekend that President Xi over in China was going to have to stop with the bullying tactics, or else you were going to see a lot more global backlash against him, because it's building. It continues to build. Now, he threatened last week Boeing by name. But what did Boeing do after he came out? And I said this on Sunday night. He was going to do it on Sunday Night Futures Live. You can go back and check it out. I said that he's going to come out and he's going to agree to an investigation. Of course, it'll be a rigged investigation. And the pressure on China will alleviate. And that's exactly what happened. China rallied. And what happened to the shares of Boeing? They ripped. They broke out. So, do I believe that we may see a continuation move higher here? Yeah, I'm looking to buy Boeing as a trade, but not right now. I'm looking for a pullback and a retest of support. You saw RSI break out yesterday. Stokes are looking good. But Boeing has a lot of problems fundamentally. Technically, it's looking pretty good. And I'll leave the fundamentals, the future health of the company fundamentally in the hands of somebody else to make that call. I am not qualified, but technically in the short term, the shares are shaping up fairly nicely. They have not had the run that the rest of the S&P 500 has. So I think there's more fuel in the tank. The big 800-pound gorilla in the room is, do we have a trade war with China? And you could bet your bottom dollar, if we get that trade war, Boeing is going to take it on the chin. So be very, very careful here with your position sizing. Pat, your message was held for review. I'm not going to show this. Was that message for me? Contact me if you do, Pat, at your email address. I don't want to publicly release your email address. If you want me to show the message, I can. Just let me know. I don't want to violate your privacy. You bet, Bulgab. MAG, Nat Gas. It's okay to release the message, Pat, with your email address? Just click yes or no, and I'll take it from there. Okay, you got it. I'm gonna unleash it right now. There you go. I guess that message was for Sam. Sam, Pat's information is out there. All right, cool. Let's go to MAG. Then we'll leave off with Nat Gas for Pat. Still there. All right, monthly chart. Remember, few trading days left to go. It looks very, very healthy on a monthly basis. But remember, a lot can happen here. So the last thing you want to do is buy on a monthly breakout on the 19th, only to see on the, what do we have, 30 or 31 days in this month? I think 31, right? Yeah, 31. Only to see, 29th is the final trading day. Only to see by the end of business on the 29th of May that we're closing down below this resistance level here, having given up the breakout. So if you're buying this as an investment, what I would do here is I would do nothing. I would wait to see how we close out on the 29th. If we appear poised to close above this resistance level at current, which is at $12.95 per share, give or take a nickel, then I would look to add or open up a position. And I would keep it small because next month You might get a pullback and a retest of this support level yet again. What traders want to see is a validation of what was resistance for quite some time will now act as support. Weekly chart. Now, on a weekly basis, we have broken out above resistance, and we're holding it. We're off the highs of the week, but so far looking good. Silver is up on the week, but remember, silver is a bit extended. And I'm expecting a pullback. It's down in the pre-market slightly. I'm not expecting a huge pullback in silver. Don't get me wrong. I'm not bearish. Now, on a daily chart, we are in a clear and defined ascending wedge formation. So be careful here. Going into the week, we were optimistic. We were seeing resistance at around 1272. Don't be shocked to see a pullback and a retest of that support level. That would be a great risk-reward entry point. But at current, I would not buy these shares because you have resistance levels immediately above. And if you overlay weekly resistance levels, you have a little bit more room to get up to a weekly chart, a weekly resistance. But on a daily basis, you have two resistance levels above. I would let these shares come in. I would not be a buyer at current. Let's leave off with Nat Gas for Pat. Certainly worthy of some time because yesterday's price action was huge. We're going to go to the UGAZ, which is what we would trade if we initiate a trade here. Wrong list. Now, let's first take a peek at a monthly chart. Look at how we're flatlined here on Stokes. But overall, at current, it's still quite a bearish month with an outside reversal month. But again, we still have several trading days left to go. And let's face it, Nat Gas is extremely volatile. So a lot can happen here. We want to keep an open mind. Weekly chart. We're hooking up on RSI. Stokes beginning to probably put in a higher low. We have an inside week, no new high, no new low. Volume this week has already exceeded the moving average. So big volume so far this week. Daily chart. Now, here's where the discipline comes in. What we want to do is respect resistance. So we gapped up yesterday and we hit resistance and sellers moved in, taking the shares off the highs of the day. Now, what we'd like to see is a pullback and a higher low get put in on price. We are down in the pre-market, or we're down. Let's see if we are still down. Yeah, we're down about a little over spot 6, we're nearly spot 7% on the session. And it looks as though we're probably going to go lower. So we're going to keep an eye on Nat Gas. We're probably going to initiate a trade on a higher low on price some point in time this week. I need to see a bullish reversal bar off of a key support level, probably on spot price, and we'll look to open up a trade. So we'll definitely look to open up a trade this week on Nat Gas. If we get the shares that pull back to us, flash a reversal bar off of support, and then we'll put on some risk. All right, Bitcoin, last chart up here for, I'll say Louis. Level Louis? I love these names. Bitcoin. Bitcoin's looking good on a 4-hour basis. Here's a weekly chart. Here's your upper band of resistance at around 10,269. Support at 9,000. So it's in a healthy uptrend. Daily chart. The price action for today is so far very, very bullish. We have a bullish reversal bar. No new daily high yet. RSI, higher lows. So the chart looks good. My only concern, and I want to validate something here. Let's see whether or not I can do this. Net, it looks good. But what I want to do is I want to do something that has been haunting me for a while now. So let's do this. I want to do a correlation of the S&P 500, we'll put it in blue, relative to Bitcoin. And here's what concerns me about Bitcoin, is that if you're worried about a sell-off, you know, a lot of people talk about Bitcoin being a store of value. And I'll probably get a lot of nasty grams about this. I know Peter Schiff does. Not that I'm any Peter Schiff. But he's a very big bear on Bitcoin. Probably overly bearish on Bitcoin. I'm not as bearish. I'm just concerned about the perception of what Bitcoin is. I don't believe it to be necessarily a store of value. A lot of smart people out there completely disagree. And they're a lot better off than I am. But when you take a look at the facts, here's the fact. What you're looking at here is a read above 0 implies that you have a correlation between the S&P 500 and Bitcoin. And that correlation grew greater during the sell-off, meaning Bitcoin was trading by and large along with the S&P 500. So if I'm afraid that the market's going to sell off or crash, am I going to, with this data at my fingertips, am I going to rotate into Bitcoin? No, I wouldn't do that. I would rather take a look at gold. That being said, were I not looking at this as a store of value and I'm looking at Bitcoin from a higher level view as a speculative trade, I always worry about the government moving in and doing their thing because they don't want competition with the US dollar. That's why they allow the COMEX to print so much more gold than what there really is on paper. But this monthly chart of Bitcoin is extremely bullish. I mean, really, really nice. So if you're looking at Bitcoin as an investment speculatively, then it's looking good. If you're looking at it as a store of value, I would be very, very wary of that type of investment because I think it's an inaccurate investment. And if you look historically, traditionally, gold and the S&P 500 and Bitcoin trade in tandem by and large. Not always, but by and large, they trade in tandem. Okay, with that, folks, did I already talk about SQQQ? Pat, that message is for me? Or were you talking to somebody else? I already went over the NASDAQ 100, which is really the proxy for talking about the SQQQ, because that varies due to the derivatives. Taking a look at, I'm just going to bring up the trip Qs in the pre-market. We're edging down here a little bit off the highs of the session, but we're about flat relative to yesterday. Check out the NASDAQ 100. NASDAQ 100 down slightly. Broke support. Broke 4-hour support. So while I don't plan on adding more at current to the SQQQ, I'm glad we did what we did yesterday. So we're good here. Folks, if I could ask you to smash that like button, I'd really appreciate it. Subscribe to the channel. Thank you very much. Hey, Bill, good morning. Hey, Bob. Hope you're well. Hope you're well too, Bill. All right, last one. W. Short W Wayfair. They've been a beneficiary of late of the Corona play. So my knee-jerk reaction is to probably say yes. Yeah, the easy money's been made here. Would I short right now? No, because what you're doing is you're nearing support, rising support at the 20-period moving average. You may get a pullback as far as 134.80. I don't know what the fundamentals are here. I don't know what they were prior to the pandemic, and I don't know what their guidance is. But what I would do is I would wait for a counter-trend rally on Wayfair. Look for a lower high. And if you see topping action on a lower high, initiate with a stop loss right below the 197.06 mark. And then you look to add on a break to new lower lows. I would not go shorting. I think the easy money to the short side's been made here because we were so overbought. But Stokes are looking weak. I think the easy money's been made here, both to the long side and to the short side. I wouldn't initiate a new short here. Too much risk, not enough reward. You're welcome, Bill. Everybody have a great day, a profitable day. Be well.